Hello, everyone. Good morning from this part of the world. It's a cloudy atmosphere right here, and I'm so excited to welcome you to another promising edition on the Extreme Speed Live. Well, before we kickstart the session, let's run through our daily routine by confirming that we are all good to go here. So are we all on the same page? Let me know in the comment section. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. So your highs will let me know that we are on the same page. So I will really appreciate your feedback, please. And thank you very much as you do so. Okay, so I can see a handful of comments here. Thank you very much, guys. I really do appreciate those feedbacks. I see a comment 27212. Thank you. 88697. Hello, Carrie. Good morning to you. Thank you very much. 95 Itua JP. Good morning to you. Rick. Good morning to you. Thank you very much, guys. I really do appreciate. So on this note, I will take this as a positive confirmation that we are all good to go here. And on this note, I welcome you all once again to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be dissecting the current market structure from a technical standpoint using simple and fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insights into the historical price movement on the assets on our watch list for this week. Well, so far this week, we have been monitoring for major assets, which includes the USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD. And in the last 24 hours, we've been doing pretty well. For instance, the USOILSPOT has moved significantly to the downside. We also had a situation, same situation on the XAUUSD as well, and of course on the GBPUSD. But on the USTech100, we've been seeing some little bit of choppy situations going on there, and today we are going to be diving deep into it to understand the psychology behind this price movement and make a strategic decisions ahead of the New York session today. For those of you who are joining us for the first time, you're highly welcome on board, and I know that you will be wondering that what is this all about? Well, as technical traders, we gather here on a daily basis, coming together as a community and engage in follow-ups and review of our current positions if we have any running. The session kickstarts by 10 a.m. UTC, 11 a.m. West African time, and I highly recommend that you stay tuned in so you don't miss out on the insights that we will be sharing during the course of the session. By being active participants, you will gradually enhance your understanding of our analytical approach. Our aim here is to equip you with knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered in this community to enhance your own trading decisions and strategies. Once again, I extend a warm welcome to you. So with that being said here, let's dive right into the business. And as usual, the first thing we normally do is to check on the economic calendar. And for those of you who had been with us, you know how important this is, of course, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. So on the economic calendar, we usually focus on high impact events from the economic dockets that affect the assets on our watch list. And based on what we have for this week, we will be focusing on the United States and the United Kingdom economic dockets. Now, for today, Tuesday, November 7th, we do not have any high impact event to look forward to, so I took it a step further to include the medium impact event. At least we want to have an insight into what fundamental factors that will be driving the market sentiments today. And in about 5 to 6 hours from now, we are going to be listening to Christopher Waller's speech. For those of us who don't know, Christopher Waller is a member of the Board of Governors of the Federal Reserve System, and in fact is going to be giving a speech later today. And then much more later today, I think in about 7 to 8 hours from now, we're going to be listening to John C. Williams, who is the president of the Federal Reserve Bank of New York. And whatever these people are going to be saying today will be giving us an insight into the monetary policy of the Federal Reserve. And of course, we are going to be having an insight into the health condition of the United States. Remember, we had Uwi's speech yesterday from the Federal Reserve. He is a member of the Federal Reserve too. But what he said, one of the highlights we can get from what he said yesterday is that there could still be some consideration on the federal rate cut that was projected for June 2024. And all this meeting, let's take note that all this meeting as well, all the speeches, will be in anticipation of the Fed chairman's speech, which is coming up tomorrow. So we are going to be taking all this into consideration while we reflect on the current market structure. And remember that all these events here, the anticipation of this event has a tendency of influencing the market sentiment, which will of course reflect on the chart as price action. So with that being said here, let's dive right into the chart so we can look at things from a technical standpoint. So the first asset on our watch list for today is going to be the US oil spot. And in fact, you will see what we have here, very interesting situation as price action appeared to have broken down that robust demand zone we identified yesterday. Well, prior to the breakdown of that demand zone, remember that we were actually looking out for buying opportunity, which we of course took advantage of. So for the sake of clarity, let's run through how yesterday started and what led to the decisions we made. So during our live session yesterday, we acknowledged that price was initially confined within a range between the $81 level and of course the $80.65 level to emphasize the indecision going in the market as at the beginning of this week. And coupled with the fact that price remained below above the demand zone we identified on the higher time frame, we were looking forward to the breakout of the resistance line of that range to give us an opportunity to buy. And if you remember vividly, I told you all yesterday that I was already in a buy position as we saw price move over 100 pips in my favor. And I made mention here that for those of us who had missed out on that opportunity, that there is a chance that price will come back to retest the structure that was broken to incite another wave of bullish momentum. And if you had followed through with this expectation, we had the opportunity of buying. Price moved about 100 pips in our favor before the bearish momentum came in to take us out of the buy position. And of course, if you had followed through with our preaching here as regards to how we manage our running positions, that as soon as price moves significantly well in our favor, we want to be moving our stop losses to secure the current buy position. And if you had done that appropriately, you must have been taken out with a moderate size of profit or at a worst case scenario break even. And in fact, you will see what happened here after the buy position. We saw how buyers begin to find it difficult to break through that descending trend line we spotted on the higher time frame. Now we saw that as soon as price got into that structure, we begin to see a consolidation phase around that area, which incited the idea that buyers may not likely be able to push price further to the upside. And for those of you who followed our plan for yesterday, that if price will at any point in time break down the support line of that range at the $80.65 level, we will be having a sell position running. And if you are taking advantage of that opportunity, well done to you for being on standby, as you will currently be running with about 155 pips in profit. Now remember that we also had another level at the $80 mark. Remember that this level was that demand zone we identified on a higher time frame, and of course we did said that if price goes on to break down the structure, we look out for more selling opportunities. And if you had done that, you will be currently running with over 100 pips. So we have a cumulative profit of over 250 pips in profit at this point in time. And for those of you who are taking advantage of this opportunity, well done and kudos to you for being on standby to capitalize on this move. Now, the next thing we want to be doing as usual is to ensure that we protect the current sell position by moving our stop losses accordingly. And based on what the current structure is saying right now, I will be suggesting that anywhere below the $80 area, between the $80 and the $79.60 zone seems most appropriate to secure the current position. And while we are trying to move our stop losses, please keep in mind that we want to be given enough breathing space for price action to move around, so that if price will do some retracement and continue the downtrend, we will still be in the trade in that regard. So with a well-secured position at this juncture, what is going to be our next line of action for today? Are we going to continue buying the US All Spot, or are there chances that buyers can come in anytime soon? And of course, looking at things from a fundamental perspective, I am actually surprised that despite the joint commitment from the Saudis and the Russian government to reduce oil production by 1.2 million barrels per day until the year end, the market response has continued to lean towards the bearish perspective. Now, are there chances that we begin to wake up to the reality of this cut in oil production, or will price just continue to nosedive to the downside? Now, to have a better perspective into this and to plan for today's trading session, let's quickly take a preview of what is going on the higher time frame, so we can have an holistic perspective to guide our decisions for today, and of course be on the same page with us, those of you who are joining us for the first time. Now, the first time frame we looked at the beginning of the week was the daily time frame, of course, and one of the first levels or structures we noticed here was the $80 mark, which has been a very important price level that had played a major role in determining the direction of price action since the beginning of this year. And in fact, between the month of March and the month of August, it was more of a selling niche. As you will see, I have a supply zone here, as every attempt by the buyers to break through the structure has been met with strong resistance from the sellers. And not until the later part of the month of August that we witnessed a final breakout of that range, that is taking out all the sellers within that area to incite a strong move to find the highest point price action has been for this year at the $94 per barrel. Now, since price tested that high in the month of September, we've been seeing some nosedive to the downside. In fact, we have a higher low, bringing price back into our key level at the beginning of this week. And of course, you know how we use our key levels in this community. Whenever price action remains above the key level, we look out for market conditions that supports buying potential. But if at any point in time price breaks down our key level, we want to be looking out for patterns and structures that supports the idea of selling. Now, if we look at what is going on here and considering what has been happening in the last 24 hours, it's quite clear that price action has just broken down the $80 mark, though we can't say this is a breakdown truly, as this current candle still has about 11 hours to close. It could still turn out to be a false breakdown. Let's take that in mind. But the fact that price is within our key level for this week makes this whole area a very crucial moment for us. And we went on to scale down into the 4 hours time frame where we were able to identify an interesting setup. Now, one of the things we did here was to take into consideration the nature of price action in the month of October. And we can see here that despite the strong bearish momentum that brought price into the $80 barrier, we saw how it became difficult for sellers to break through the zone throughout the month of October, further emphasizing this area to be a strong demand zone. However, in addition to that, we have a couple of descending trend lines. Of course, after connecting the series of lower highs, we have the trend lines, which we said we will be using to guide our decisions for today. And that if buyers continue to push price to the upside, then a breakout of the trend line will be welcoming buying opportunities. However, we emphasized here yesterday that if at any point in time price breaks down that key level at the $80 area, then at this point we will have been taken out of the demand zone, negating all the buy positions there to incite a bearish signal. And as it is right now, we have an engulfing bearish candle slicing through that structure. The question going into today's trading session is, are we going to be seeing price come back into structure to incite a downtrend continuation, or will price action further climb to the upside? Now, to have a better perspective into this, let's look at what has been going on since the beginning of this week. Now, our center of focus is right here now that price has broken down the $80 mark. Remember, we've moved our stop losses to secure this current sell position. So let's see if the market will retrace back into structure to incite a downtrend move, or are we going to see price transition into a downtrend continuation pattern, maybe a falling wedge or a bearish rectangle pattern, before the breakdown retest of that structure will incite a downtrend move. Now, I have a level here which I will be using to guide our decisions for today. So the lowest point price action has been for this week is the $78 $78.80 level. So we do want to be marking out these levels on our chart, as we will be needing it as a reference point to guide our independent trading decisions for today. I don't know why my chart is not loading up. I want to label this line so that we can have a visual representation on our chart. Let me see. Let's hold on okay, it finally load up. All right, so we have the $78.80 level. So we mark that level out on our chart, and then let's see if the market will break through that structure. And if it does break through, we want to be adding more sell positions to our existing trade. Now, there are two ways to which we can capitalize on the breakdown of the $78.80 level. Now, for those of us who are profitable so far this week, that is, if you had been joining the bearish momentum we took at the beginning of the week, you will be in over 250 pips in profit, so you can afford to leverage on the profit you had made so far this week to test waters around that area. So placing a buy stop order for you makes quite a lot of sense, and if price doesn't work, If it doesn't work as expected, you will know that you are just risking some of the profit you had made so far this week. However, for those of you who are joining for the first time, definitely I will encourage you to exercise patience and wait for confirmations to happen, like breakdown of structure, retest, before we want to be joining the decline to the downside. So let's see how the market will play out from this current area. We remain bearish on this current market structure, and let's see how far this momentum is going to go. And if at any point in time we begin to notice the formation of a reversal pattern, maybe like a double bottom structure, head and shoulder pattern, then definitely we want to be marking out the neckline to capitalize on that uptrend move. But if that is not the case, we continue to maintain a bearish bias as long as price remains below that $80 mark. So these are my views here. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. In the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list for today. I see your comment, Ranil. I would advise you to go to the home page on this platform that you are using right now. Look at the top right hand corner of your screen. You will see the logo for the contact center. It has a head and a headset over it. Click on it and you will be directed to the contact center, and you will definitely be attended to in due time. So please try that out and get your issues resolved appropriately. All right, so let's move on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, and in fact the market has been very choppy in the last 30 hours now. As you will see, price action still remains within that range between the 15,150 and the $15,085 area to emphasize the level of indecision at this point. Now, I'm of the opinion that the anticipation of the Fed chairman's speech, which is coming up tomorrow, may likely be one of the reasons why we are witnessing this indecision going on right now, as majority of participants in the market would have stepped aside waiting for clues and impetus that will guide trading decisions going forward. Well, during our live session yesterday, we were able to identify a couple of levels. In fact, we had a range and an ascending trend line, which we said we will be using to guide our trading decisions. So we had this confinement of price action between the 15,125 and of course the $15,085 area, giving us an insight into the uncertainty in the market at that point in time. And as a result of this, coupled with the ascending trend line, we projected that we will be buying this asset at the breakout of the 15,125. And in fact, we did see price come back to retest that structure, as you will see right here, leading into price moving about 55 pips thereabout before the sell pressure came in to break down this ascending trend line. And if you remember, what I said here yesterday is that we will be looking out for selling opportunities if price breaks down this ascending trend line, leading to the breakdown retest of the 15,085 area before we can start considering selling. And in fact, though we had price breakdown, but at no point in time did we say price close below the $15,085 mark. So at this point in time, it's more of a consolidation phase. But at this point, you shouldn't be in any trade right now, because I'm not. After the price broke out of the resistance line at the 15,125, we saw price come back into entry point. And if you had moved your stop losses accordingly, you must have been taken out at a worst case scenario break even on that one. Now, going into the New York session today, how do we intend to capitalize on the next move? And for us to do this, we want to scale up into the higher time frame so that we can have a background knowledge of what is going on, and at the same time be on the same page with those of you who are joining us for the first time. So our first analysis here on Monday was right on the daily time frame, where in fact we emphasize how the market has been very bullish since the beginning of this year. And to emphasize this, we have this ascending trend line after connecting the series of higher lows. And not until about a couple of weeks ago that we finally saw price break down that ascending trend line for the first time this year. Though the breakdown didn't come to us as a surprise, as we were already witnessing a series of lower highs in that regard, giving us this beautiful descending trend line too, as you will see here. Now, to guide our trading decisions for this week, we marked out a key level at the 15,300, and that is our key level right there, which of course we said, you know how we use our key levels now. When price action is above the key level, we want to look out for buying opportunities, and if price remains below the key level, we want to look out for selling opportunities. But at this point in time, price remains below the key level. And there is one thing I emphasized here yesterday. Look at what we have here. We saw price break down the ascending trend line, and you know, from a technical standpoint, we expect price to come back, retest the trend line to incite a downtrend move. Now, throughout the course of last week, we saw this bullish momentum, which we of course took advantage of, as we saw about a 900 pips move back into that confluence where both the ascending trend line and the descending trend line shares a beautiful and sweet spot to look out for new opportunities. Now, with price back into this area, we needed to see how the market participant will be reacting to the structure to determine what our next line of action will be. Are we going to be seeing a downtrend continuation if price selling pressure persists there? Or are we going to be seeing price break out of the descending trend line and respect the ascending trend line one more time to incite an uptrend continuation? Now, to have a better perspective into what is going on here, we scaled down into the 4 hours time frame where we spotted that 15,150 level. So if you look at the structure closely, going to as far back as the second week of the month of October, you will see how the 15,150 had been a strong selling niche in this particular market. Now, we saw the impulsive move that happened last week, which broke out of this descending trend line. And you know, from a technical standpoint, whenever price breaks out of a structure such as this trend line we see here, we expect that some profit-taking activities might come up, which would reflect on the chart as a retracement, maybe back into the ascending trend line to incite an uptrend continuation. Now, if we look at this impulsive move that started last week, let me zoom right into the current structure. You will see that since price tested that 15,150 after about 2 or 3 weeks, you will see buyers have been finding it difficult to break through that area, as every attempt by the buyers to break through has been met with strong resistance from the sellers, and this had continued into this week. And in fact, in the last 4 to 8 hours, we've continued to see selling pressure around that area. Now, how do we intend to capitalize on any opportunity here? Well, personally, if this sell pressure persists, then I want to be looking at the breakdown of the 15,100 to join a bearish momentum, maybe into the 15,100, which will be dovetailing to about 100 pips thereabout, or a maximum of about 900 pips if price goes on to break down the 15,000 area into that descending trend line that was broken last week. And the only condition that will make me buy is for price to take out the 15,150. Look out for confirmations like retest of structure, then we can join the uptrend. Then if price goes on to break out of the 15,300, we definitely had more buy positions to our exiting trade. So now let's go down into the 1 hour time frame and position ourselves ahead of the next move. Now scaling down into the 1 hour time frame, let's scroll into the current structure. So we are looking at this area around, I will just put it at the 15,085 level. In fact, I want to see price take down this range to the downside to give me an opportunity to sell. So remember, I made mention earlier that price is currently within a range, emphasizing the level of indecision here. So let's see how the market will play out around here. Personally, I want to see price take out all the buy positions within the 15,085 zone for me to start considering selling, and this will only come in the form of the breakdown, retest of the structure to join that decline to the downside, and of course have your stop losses sitting somewhere close to the 15,000 or above the 15,125 area, which will be dovetailing into about 40, 45, 50 pips thereabout, depending on where your entry is. However, if price action goes on to break out of the 15,150, a retest of structure will be all we need to capitalize on an uptrend move. And of course, remember, you want to have your stop loss in place, very, very important, which will be dovetailing to about 40 to 45 pips on this one too. So let's see how the market will play out today. Our center of focus is within this range between the 15,150 and the 15,085 area, where depending on the direction of the breakout will give us an insight into where price will be going forward. If you have any questions as regards to the current setup, it's a very simple one. We just need to mark the levels out and ensure that we exercise patience for new structures to mature. If you have any questions, feel free to drop them in the comment section, and I'll be taking the next 10 to 15 seconds off to wait for your inquiries, and you can as well use that time to mark out these levels on your chart. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the GBPUSD, another phenomenal move we witnessed here on the GBPUSD in the last 24 hours. And for those of you who have been part of this journey, well done to you for being on standby to capitalize on this move. Well, currently the pound sterling is under pressure due to the Bank of England's pessimistic forecast warning of a potential recession for the United Kingdom's economy for next year. And as a result of this, the immediate reaction to the pound has been very negative. As you can see, price has gone through a very strong bearish move to the downside. Now let's take a quick look at how we started our trading decisions yesterday, what really led to what we did here. Now during our live session yesterday, we looked at how participants in the market was reacting to this current market structure since the beginning of the week, and we saw this range here between the 1.239 and the 1.23650 area, where I was telling us yesterday that I took advantage of a buy position at the breakout of that resistance line. And in fact, we saw price moved about 36 pips before that engulfing bearish candle brought us back into the zone. And one of the things we said here yesterday is that if price will come back into the structure and we see buy pressure resume, we want to be capitalizing on an uptrend continuation, and that is price must respect this ascending trend line to push price to the upside. I'm sure some of us will have taken some buy position around that area because of the consolidation phase that happened around that trend line, which must have been taken out in a loss at this point. However, we mentioned here yesterday that if price at any point breaks down that ascending trend line, then a retest of structure will further give us a signal to join a decline to the downside. And in fact, I personally took advantage of the breakdown here. Well, some of us will have sold around this area. If you had done that, that means you caught that move early enough. But I took it right here at the breakdown of that support line, had a 1.23650 level to inside my first sell position for the week. And since then, price action has nosedived to the downside and has moved over 60 pips in profit at this point. And for those of you who took advantage of this opportunity, well done and kudos to you for being on standby. And the most important thing you want to be doing right now is to move your stop losses, secure the current sell position anywhere around the 1.235 and 1.234 seems most appropriate to secure this position while we look out for new opportunities in this market. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? How are we going to continue selling, or are there chances that buyers can still come into this market? Now, let's scale up into the higher time frame. So for those of you who had missed out on our session yesterday, you have the privilege of being on the same page with us. Now, on the daily time frame, we saw a very simple setup, which is expected to guide our trading decisions for this week. Now, the first and first here is that since price action tested that high, had a 1.314 here in the month of June, price had nosedived to the downside and along the line has formed a series of lower highs in that regard. And if we connected a series of lower highs, we have a couple of descending trend line we shall be using to guide our trading decisions for this week. Now, in addition to that trend line, as you will see here, following that strong impulsive move to the downside, we saw that throughout the month of October, it became difficult for sellers to break through the 1.2100 zone. As you will see, throughout the month of October, at no point in time did we see price break down that structure, leading to that engulfing bullish candle that's broke out of our key level for the week, situated at the 1.231. So we had our key level right here, which has been played a major role in determining direction of price action since the month of March. It was more or less a buy niche at some point before price did break down the structure in the month of September. And since the breakdown, we can see price fell into a consolidation phase, giving us an insight into the indecision there. Well, I felt this consolidation phase was looking more like a reversal pattern for me. If we look at this impulsive move right here, And whenever we identify a potential reversal pattern like double bottom structures, we want to be marking out the neckline, which coincidentally shares a confluence with our key level at the 1.231. And to validate this reversal pattern, we do want to be seeing price action break out of that neckline, retest of structure to incite an uptrend move. Now, as at last week Friday, we saw an engulfing bullish candle breaking out of the neckline. Price came into the descending trend line, and we saw a sharp rejection here. So how do we intend to capitalize on this one? Now, to do this, we scale down into the 4 hours time frame where we begin to see things more clearly. And on the 4 hours time frame, I took into consideration the nature of price action since the second week of the month of October. And one key factor about the structure here is how important that area between the 1.2330 level and the 1.23, which happens to be our key level on the daily time frame, had played a major role in negating all attempt by the buyers to break through that area, hereby making that area a robust supply zone to work with. And not until last week we finally saw the breakout of that supply zone. And from a technical standpoint, whenever price action breaks out of a key structure such as this, we expect some retracement back into structure to incite an uptrend move. Now, in addition to that is this ascending trend line I spotted here. And as you can see, price action also broke out of the ascending trend line on Friday, just like it did broke out of the supply zone here. Now, the bearish momentum we have been witnessing since the beginning of the week is gradually approaching the structure, which is giving us the inclination that we might be looking forward to a retest of the structure that was broken to incite an uptrend move. Now, the question we want to be asking going into the New York session is how far will this bearish momentum go before the next uptrend move will happen? So to guide this idea, to help us position ourselves for that, we are going to be focusing on this area between the 1.23 and the 1.2200 area. So depending on how price reacts to this area will be determining what our next line of action will be. Another thing I would like to call our attention to is how this ascending trend line shares a beautiful confluence with that 1.2300 area. So what we are going to be doing today is to exercise patience and see how market participants in this market will be reacting to the 1.2300 psychological level to determine what our next line of action will be. So if we are going to be seeing something like a double bottom structure around this area, maybe price action test the ascending trend line, and we begin to see signs that sellers are finding it difficult to break through the ascending trend line, then we will definitely be getting ready for an uptrend continuation. However, if price will break down the 1.23, a retest of structure will confirm that we can add more sell position. Then we want to wait and see how the market will be reacting to the 1.22200 level to decide if we are going to be going further south or getting ready to join another move to the upside. So you can see how crucial this juncture is, and it's very, very important that we exercise patience and wait to see how the market will be reacting to this previous supply zone, which I'm of the opinion could turn out to be new platform for buying opportunities going forward. So let's see how the market will play out here. For those of us who still have a sell position, I've told you how to move your stop loss, secure the current sell position, and let's see how the market will react. So a quick recap here: a breakdown retest of the 1.23 welcomes more selling opportunity, and wait to see how the market will react to the 1.22 area to know if we are going to be joining an uptrend or price will be going further to the south. However, if we begin to see buy pressure around this area, maybe around this structure, maybe double bottom structure, then we want to be getting ready to buy. Now, this whole confirmation around this crucial juncture may likely take between 8 to 24 hours before it forms. So we'll need quite to be very, very patient at this area, as we are at a very critical juncture in this particular market. So these are my views on the GBPUSD for today. So let's see how the market will play out around this area. And of course, by tomorrow, we shall be back here again to review how well these assets have been doing. If you have any questions whatsoever as regards to my explanations on this setup, or you need me to do some further clarifications to an area you really did not understand, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a yardstick to guide your independent trading decisions for today. All right, I see your comment 86256519. Viola, good morning to you. Glad to have you around with us this morning. All right, so in the absence of no questions, I will assume that we are all on the same page. And in that regard, let's move on to the last asset on our watch list for today. So the last asset on our watch list for today is my favorite. That's the XAUUSD, popularly known as the gold spot. In fact, it's quite a very, very interesting situation here. Though the week started on a negative note for me, as I did buy at the breakout of the $1,987.50 level, but unfortunately was taken out in a loss on that one. But we were able to recoup the loss we incurred at the beginning of this week. Well, we are observing signs of further weaknesses in gold as trading activities resume the downtrend, pushing price further south. The decline might be seen as a corrective phase considering the current dip in US Treasury bond yields. These lower yields are a result of growing expectations that the Federal Reserve is approaching the conclusion of its policy tightening cycle, which could potentially limit the extent of loss that we are witnessing in the gold commodity. So I think. Now, looking at the structure here from a technical standpoint, how did we get into what we are seeing on the chart right now? Well, at the beginning of the week, it was more of a consolidation phase. As you will see here, price was initially confined within the 1,993 level and the $1,987.50 level. As you will see, it was buyers and sellers were trying to test waters to see where price will likely go. Though prior to the live session yesterday, we actually saw the breakdown of the $1,987.50 level to the downside. However, something here caught my attention, which made me not to join a sell right away. And that was the inability of sellers to break through the $1,982 level, which actually we saw the attempt by the sellers to break through lasted about 5 to 6 hours before this buy pressure brought price back into the 1,987. So what I said here yesterday is that because of the situation, we might likely see price break out of this descending trend line to incite a bullish expectation. And of course, I had a buy position had a buy stop order above that structure. It got triggered, but unfortunately was taken out of that position as sellers continue to push price to the downside. And for those of you who are part of our live session yesterday, remember that we acknowledge this level as the support line as at yesterday, which happens to be the lowest point prior to our live session. And we said if price action breaks down and retests the structure, then we can feel comfortable selling the XAUUSD. And that was exactly what happened here. About 3 to 4 hours into the New York session, we saw the breakdown happen. Price came back to retest structure, and then it was a very good opportunity to have a sell stop order as we rode that momentum all the way to the downside. And it was at this morning I added another position at the $1,971 area. But for those of you who are taking advantage of the breakdown of the 1,982, you will currently be running with over 150 pips in profit, which is not bad at all. So we were able to successfully recoup the loss we incurred at the beginning of the week and still be on the positive side of our portfolio. So for those of you who took advantage of this opportunity, well done and kudos to you for being on standby to capitalize on this move. Now, with that being said here, with a very good sell position running at this point, you know how we do it. The next thing we want to be doing is to secure the current sell position by moving our stop losses accordingly to lock in this profit. Now, with the way things are going here, I will be suggesting that anywhere around that $1,971 area seems most appropriate to lock in the current sell position while we maintain our patience looking out for new opportunities in this market. Now, with a well secured sell position at this juncture, what is going to be our plans for today? Are we going to continue seeing this bearish momentum continue to the downside, or will it turn out to be the end of a retracement phase that will incite an uptrend move? Now, to go into the details here, let's scale up into the daily time frame so we can have an holistic perspective into what is really going on at this point in time. Now, if you scale up into the daily time frame, for those of you who are with me for the last couple of weeks now, you will see that the current structure we have on the daily time frame has really not changed, as the market dynamic still remains the same. Now, it is clear that since the month of March of this year, it's evident that price action has been in a consolidation phase between the $2,010 level and the $1,810 area to emphasize the level of indecision in this market. Now, within this consolidation phase was this descending trend line we spotted last week after connecting the series of lower highs, and in fact a couple of weeks ago we saw our price broke out of that descending trend line with an engulfing bullish candle, bringing price back into that $2,010 area, which is peculiar with selling pressure since the month of March. And the inability of buyers to break out of that $2,010 mark is a red flag that we might be getting ready for some profit-taking activity move, which would reflect on the chart as a retracement of this impulsive move that we saw here. Now the question is, how far will this retracement phase go? Is it going to get to as far as that trend line that was broken to incite an uptrend situation? And one interesting thing about this trend line is the fact that it falls within that demand zone we identified here around the 1,900 and the 1,890 zone. So will price get this far? That's about how many pips left? That's about 700 to 800 pips left here. And if that is going to be the case, it's going to be a very significant opportunity for us to capitalize on. Now, with this information we have here, we cannot still ignore the potential that buyers will still come in. In fact, I would like to see a breakout of the 2010 to confirm bullish expectations. But let's scale down into the 4 hours time frame. Let's see what we saw here. Now, on the 4 hours time frame, we took into consideration the nature of price action throughout the month of October, and we saw how price had consistently found higher highs thanks to the geopolitical tension happening in the Middle East. Now we saw the series of higher lows. We connected that, giving us this beautiful ascending trend line, and not until the beginning of this week, we finally saw the breakdown of that ascending trend line, as you will see here. And whenever we see a breakdown of an ascending trend line like this, we expect that we might be getting ready for a momentum shift. Now, in addition to that structure is this range between the 2010 and the 1970 area, which emphasize the level of indecision in this market, as you will see right here. Now, with the situation here where price is trapped within a range, emphasizing the uncertainty in the market, you know how we do it whenever we have this channel. We want to exercise patience and wait for either the breakout or breakdown of that range to give us an opportunity to trade. Now, if you look at what has been going on here in the last 2 or 3 hours, price action is back into that demand zone, which has been prominent for the last 2 to 3 weeks here in this market. As you will see, sellers have found it difficult to break through this area in the last 3 weeks. Now, price is back into that zone. Now, the question we want to be asking now is, how will the market participant react to the zone right now? Are we going to start seeing buy pressure resume again in the next 3 to 4 hours to incite a retest of the ascending trend line, maybe to incite a downtrend, or even break it out? Break out of 2010 to incite an uptrend continuation. So you would agree with me that we are at a very crucial juncture in this market where, depending on what happens here, will determine what will be going on for the later part of this week. So that is why I have said earlier that we need to move our stop losses on the current sell position, secure the position while we are within a very robust demand zone. So right now, let's scale down into the lower time frame so that we can see how participants are currently reacting to this area. Now, scaling down into the 1 hour time frame, if we zoom into the current structure, you will see here that since the beginning of the week, in fact, if we go to as far back as last week Friday, it has been more of a series of lower highs. And if we connect the series of lower highs appropriately, we have a beautiful descending trend line that will be guiding our trading decisions for today. And you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we want to feel confident and comfortable in a sell position. And the only condition that will make us want to start considering buying is if price will break out of that descending trend line. Now that price still remains below the descending trend line, we shall continue to look out for more selling opportunities. Now, I have a level here at the 1971, which was broken about 4 to 5 hours ago, as you will see here. And from a technical standpoint, we still expect that price may come back to retest the structure, which interestingly shares a confluence with that descending trend line, maybe to incite a downtrend if buyers find it difficult to break out of that descending trend line. And another thing that we also want to consider here is that if price does not climb up, that is, if price does not go to retrace into the structure, but instead continues to consolidate around this area, then a breakdown will welcome selling opportunities. Now, to guide that breakdown, let's mark out another level around this area, which happens to be the lowest point price action has been for this week, which is situated along the $1,964.25 area. So you do want to be marking out these levels on your chart, as a breakdown retest of this structure will be welcoming more sell position here, and extend your trend line so that we will continue to use it to guide this bearish momentum going forward. So we remain bearish on the XAUUSD as long as price remains below the descending trend line. However, if at any point in time today we see a situation where price breaks out of that descending trend line, then at this point we want to start considering buying. Now remember that we are not going to be getting too excited here, as the breakout of this trend line could still turn out to be a false breakout. So we really need to confirm this breakout by waiting patiently for a confirmation that sellers are finding it difficult to stay below the descending trend line, and this would reflect on the chart as price dropping back to retest either the 1971 or the trend line, where the appearance of buy pressure or reversal pattern will incite the uptrend move. So this is the only condition that will make us consider buying the XAUUSD today. So you can see how crucial that descending trend line is, as it's going to be guiding both our bullish and bearish expectations. So to do a quick recap here, a breakout of the descending trend line will be welcoming the idea of buying the XAUUSD, while price remaining below the descending trend line will welcome selling opportunities, where a further breakdown of the $1,964.25 level will welcome more selling opportunities. So these are my views here on the XAUUSD for today. It's a simple setup we have here. Our center of focus basically will be between the 1,971 and the $1,964.25 level, where depending on the direction of the breakout will give us clues into what we are going to be doing. So these are my views here. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So in the absence of no questions, I want to assume that we are all on the same page. I see your comment, Trancoy. Good morning to you. Glad to have you around with us this morning. So on this note, I want to wish us all the best of luck. It has been a wonderful moment with you guys today. We were able to attend to 4 major assets, which we've been monitoring since the beginning of the week, which includes the USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD, all of which we were able to identify simple trading setups that we will be using to guide our decisions going forward, and especially during the New York session today. So I will just encourage us all to exercise patience and allow the structures we've identified to mature before we jump into any positions going forward. And we look forward to some economic events today, some speeches coming in from the U.S. economic docket, which also has a tendency of influencing market sentiment. So in that regard, let's have a well-defined risk management strategy to protect our portfolio against any sudden pullback that could lead us into unnecessary risk on our portfolio. So well done, everyone. And on this note, I wish us all the best of luck. And for those of you who joined us for the first time today, I do hope you are able to gain 1 or 2 things from what we discussed here today. And I encourage you to be part of our subsequent editions, as the more time you spend with us here, the better you get to understand our analytical approach, and eventually be able to use that information the information you gather here to guide your independent trading decisions. So I look forward to seeing more of you, same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and prepare ourselves for the New York trading session for tomorrow. Do have a wonderful evening, everyone. Bye-bye.